All right, everyone, welcome to the Tampa Live podcast. This is Jeffrey Iglesias, your host today. I'm here with my business partner and cousin, Vincent Anello.
Thank you, Jeff.
Anello Iglesias Group. We have mortgage legend here in Tampa Bay, Tyler Nguyen.
All right, man, you getting kudos for that.
And we have our investment consultant over here, Jonathan DeBellevue.
Good to be
here. So
here.
there's a lot of changes that we've been hearing in the market the past couple days.
Right.
The Fed had a meeting 2 days ago, and they announced 50 basis points drop.
Right.
Ty, do you want to kind of give us a little bit of a forecast of what you're seeing in the mortgage world and with like home loan applications, defaults, approvals, things like that?
For sure.
Going forward in the next 12 months, maybe?
Yeah, I mean, so the good news is, I want to make sure we educate the consumer that, hey, they announced a 0.5 point cut, but it has been factored in the past few weeks now already, right? So again, from the economists that we listen to or follow, they're projecting maybe up to 75 to 100 basis points total, of a drop by the end of this year, right? So that means probably another couple rate drops.
Potentially a total percent. That's huge.
Yeah. So again, it's looking really good right now, and we definitely are getting a lot of increase for loan applications for refinances at this point in time. So either they're reducing the interest rate or taking advantage of both, like killing two birds with one stone.
Oh, definitely.
Taking cash out and getting a better rate.
Yeah, anyone who bought a house in the past year right now is definitely the time to start looking at
100%.
And you should definitely call Tyler over at
Appreciate
Blue Gray
that.
Mortgage
Appreciate
to
that.
talk about that.
Thank you, sir. Yeah, appreciate that.
So, Vincent, we're out here selling real estate every day. What are you seeing going forth? Time on market, prices here in Tampa.
Yeah.
What are you kind of seeing going around?
I believe average time on market right now is about 45 days in Tampa proper. Guys, we're seeing about a 1% increase year over end from last year on the prices. So prices are still steadily going up. I think last time we saw home prices and the charts that we were looking at, I think average median price was around 430, but we're seeing the average list price right now around 475. So prices are still increasing, and with these rate drops, I think that the market's going to start to pick up.
Oh yeah, and it sounds like we with what you were saying that we're seeing a lot of seller concessions today that we definitely were not seeing in years past.
Absolutely, yeah. No, the entry, the barrier to entry into the market right now is definitely a little bit lower than it's been in the past. Sellers are still negotiating to make those sales,
right?
And that those numbers are just easier for people to bring to closing because we have so many concessions coming out from all of our sellers.
Oh yeah, and what was this you were saying in the car earlier? Now seller concessions are approved up to 9% on that was FHA or was that conventional?
Conventional loans. I know Tyler can probably speak on this a little bit better than I can, but on a conventional loan right now, where it was 6% in the past, we now have 9% seller concessions. So make sure that your agents out there are really negotiating for your behalf.
Yep.
And get with these agents that really understand how they can bring more help to the closing table for you.
Oh yeah, definitely. Ty, do you want to kind of touch on how much of a difference that bump is for the consumer out here, the person buying them?
100%. Yeah, in the past, FHA, VA finance, and conventional finance, they all had their cap of how much seller credit they could get, depending on their down payment, whatnot. Due to the NARS changes, they're increasing up to 9% at this point. So of the purchase price, right? So you can get 9% seller credit, seller concession, however you want to swing it, of the purchase price.
Wow. And then the conventional loans go up to what, about 820,000 around there?
Yeah, good. We just got approved for 803,500 to be exact.
803. Okay.
803.
So roughly $70,000 in closing cost credits can be negotiated by your agent these days on your behalf.
So crazy.
It's massive.
Yeah.
That is a massive.
Yeah. You can do a lot with it. You can use it to strategize to get the rate lower, right?
Definitely, yeah.
Pay your closing costs, get the rate lower. Even sometimes maybe there's like buyers' commission, right? That you have to probably put in there sometimes, right?
At the end of the day, that is a seller concession.
It is.
So.
It is.
And it always has been.
Yeah.
I just want to put that out there.
Let's make that clear.
Exactly.
So, John.
Yes, sir.
How are you seeing these changes affect kind of like the commercial sphere and the investment sphere that you partake in? I know that your clients typically use different kind of loan products than the average home buyer. What are you kind of seeing going on in your world here in Tampa Bay?
Yeah, absolutely. So a lot of our commercial clients obviously utilize creative financing, which means they negotiate financing terms directly with the seller. They may pull a loan to cover some of the cost initially upon purchase, which they're going to eventually pay off or refinance out of. But overall, like Vinny said, homes are sitting on market longer, commercials sitting on market longer. are a lot of our commercial owners aren't able to fill their spaces as quickly as they were. We're seeing commercial rents kind of level out, and they're not getting those inflated prices they were getting during COVID, which is really good for our small business owners and people who are starting to grow their business, because now they have the ability to go and upsize their space at a more affordable cost, which is great. On the flip side, when you're looking at multifamily, single family investments, things are sitting on market longer, which means my investors are having to factor for additional holding time, additional holding cost. But on the flip side, we're able to pick up more projects because there's been about a 37% increase in the on-market inventory since last year and since the peak of the pandemic. So the amount of available homes, whether they're move-in ready or distressed, has significantly increased. So while consumers now have more opportunities, so do investors. And where we may have had to strictly look off market during the pandemic, now we can actually find opportunities, foreclosures, list bend, distressed sellers, people who are motivated to sell just in general on the market because they've been sitting for 45 to 60 days.
And that's awesome news, to be honest, because with prices the way they were over the past couple of years, cap rates on these multifamily and single family investment properties were a really tough pill to swallow. We're a little bit harder to get things financed, when the property is going to have potentially break even or negative cash flow. Do you see with the increase of inventory and seller concessions that we're going to start seeing these cap rates go back up over the next couple of years and make it a little bit more advantageous for the average investor to start looking into real estate?
We've already started to see them go back up. I have an investor who purchased a duplex last year. They did pay a premium for it. We're listed now and we're moving that unit, but if they were to refinance, it would greatly increase their cash flow. It's just not the situation they want to be in. So they're opting to sell that unit and reinvest that money into something else because the opportunity is now out there, right? So instead of refinancing that and spending more money on that unit, they're going to cash out and reinvest that money into multiple units because now they have the available inventory and the negotiability on the seller side to do that. But that being said, cap rates are increasing. We're seeing it across the board. Again, multifamily commercial sellers, even single family investors are having to reduce the price of their listings, even turnkey, to get them sold, which is overall increasing the cap rate. So whereas during the pandemic, maybe people were selling at a 3 to 4% cap rate and investors were buying it, now an investor is not going to buy if it's below 7, 8%. And we can actually find deals that are 7 or 8% on or off the market, which we could not find during the pandemic.
Strong.
100%.
Awesome.
And for these investors, John, I know we're still seeing record rent. So, even if their carrying costs get up there and they get stuck in a project, are you still seeing that they're able to kind of, bring that flow back in through renting some of these properties?
Yeah, we've been in a couple of situations over the last year, especially during the initial balancing in our market, because while we're still in a seller leaning market, our buyers have more power now, right? Where we were recommending to a couple of our typical fix and flip investors that they went ahead and put tenants in their property for 12 months until the market, bounced back and we had lower rates and more competition.
And it looks like we're getting there
among buyers.
So
yeah,
and we're like that's and we're getting
smart
there. Decision.
But yeah, I mean, your average rent in Tampa Bay is $1,900. If you can pick up an investment property below 275, you're gonna cash flow a nice little.
The average one bedroom rent.
Right? Yeah. For a one bedroom.
100%. Yeah, it was so funny. I was watching a video about this investor who has a monster portfolio, and he's dumping all his property now to reinvest that funds to buy property now at a better premium, at a better price. So it is true. It is true. So
definitely, buy low, sell high. That is the name of the game.
Got to do it.
So
yeah,
with these record rents though that we're seeing, I'm sure a lot of people out here are kind of wondering, if real estate is getting a little bit more affordable, why is my rent so high? I think the simple answer there is, rent is always going to follow behind the investment market and the residential retail market.
Yeah.
So we should hopefully see rents come down a little bit in the next year or two. You know,
Hopefully.
I don't think they're going to come down dramatically.
Yeah,
but
I don't think dramatically.
Carrying costs
but
is
it
still
would-
high, guys.
it
You got to
will be a
remember the
couple
property
points.
taxes
Yeah.
and insurance rates and everything that gets factored into someone's
That is so
monthly
true.
payments are just so skyrocketing high right now
Yep.
that it makes it very hard for people to bring down these rates easily.
Definitely. Definitely. So Ty, kind of jumping into what John was saying, you know,
Right.
like a lot of these investors due to extraneous factors have to look into creative financing and alternative financing options. You know, here at Blue Gray Mortgage, do you have products like that for investors to
Yeah.
some really creative ways to get into properties?
Yeah, yeah. Well, I mean, you know, DSCR is one of the big ones that's been around, and I would tell you that we do have fix and flip loans too. But DSCR right now, as the rates improve, right, we're seeing a better rate to offer the investors now, where they're able to cash flow or break even or cash flow, right? So I think that's going to be the biggest swing for investors. Is hey, you know, the rate's going to be in the low sixes, maybe in the fives for them, and it makes sense for them to do an investment financing.
Definitely, and right now is a great opportunity, especially to buy value add properties, especially
100%.
as these rates are going down, because you can get into one of these properties with a creative financing
Right.
proposition that Ty has to offer, and many other lenders also have to offer.
Right.
You can add that value, and as the rates come down, your equity's already been going through the roof due to the improvements, and
Right.
you can get your money back out of the property and get yourself in a more advantageous rate to have a better monthly payment to bump that cap
Yeah.
rate up.
Yeah, yeah.
Very good.
So I have this client I'm working with right now. She's from Ohio, and her theme is she has a rental company, and she's just doing Airbnb, but she's subleasing from the landlord. You know, she's leasing from the landlord.
Arbitrage.
Yes, and she's killing it. And then
Yeah.
she's right now under contract in St. Pete, and plan to probably do the same. Well, this time she's going to buy the property, and it's an ADU. So I'm seeing a lot of increase about single family homes with ADUs. You know, I think
yeah.
it was a big trend
Yeah.
early this year, last year, but now it's like it's still in demand.
You know,
Well, and what a lot of, sorry to cut you off, my friend, but what a lot of people might not realize is in St. Pete, the city actually went in and rezoned a ton
Really?
of originally single family zoned lots to allow ADU dwelling units to
That's
be
so
added
awesome. That's
due to the
huge.
demand in housing. So you can now go and check, and if you're zoned, I believe it's NS1, and you're on a corner lot, you're almost automatically permitted to do an ADU now.
I like that.
So you have to go and check with Pinellas. There's two different zoning formats, but one of them allows automatically for as long as you meet the lot requirements to be able to put an ADU on your property.
That's amazing.
And
Yeah.
you know, that's an awesome way to help the government counteract the
It's to provide
increasing-
subsidized
increase
housing in a
increased
way,
cost of living,
additional housing,
You know,
correct.
We did see that in California,
Yep.
you know, in
Yep.
decades past.
Huge
It was
thing.
a big thing out there, you know. And as property's been getting more expensive here, it is nice to know that there is still an opportunity to put an extra dwelling on your property that you can rent out, that you can give to a family member, or whatever you need to do to help kind of boost housing availability in the area.
Yeah.
Well, and,
Sounds happy.
yeah, and here in Tampa too, they've finally are rolling out the first holistic plan to reassess the zoning and development for Hillsborough and the city of Tampa as well. So we're going to see huge changes like that which they've implemented in Pinellas also coming to Tampa as well.
That would be huge.
Yeah.
Huge.
So, John, I mean, like, in that regard, what other changes like that have you been seeing in regards to city planning and zoning here in Hillsborough County and Tampa specifically?
I mean, I think the city themselves have become a lot more flexible with ADU and multifamily going up. We've seen a ton of townhome developments being approved as we really need more affordable or entry level housing to come to market in areas like Seminole Heights where people are being priced out. And so I think what we're seeing is developers in the city working hand in hand to really get creative and provide as many residential units over the next couple years as we could possibly put out.
Yeah, for
because
sure.
we're already meeting our traffic expectations for 2030. Tampa is oversaturated, so to speak, and so it's actually surprising that we have a 37% inventory increase when you consider how many people are actually coming to Tampa.
Yeah.
And we do see a lot of these new developments that are going on, you know, all along Channel Side, Ybor City, and in that corridor with the amount of workforce housing that they're planning to put into these things and affordable housing units in them. there's going to be thousands of affordable housing units built in that area, in those areas in the next decade. So it's great to see the city really taking a stand, helping these developers out with grants to bring this kind of housing to our area.
Right. Well, and you have new development projects too, even in downtown, like the Gas Bar, which has just launched for pre-sales, where their units are starting in the low 300,000s.
Oh, wow.
Investors can Airbnb units between, I believe, levels 9 and 16. If I'm not mistaken, I'd have to look back at the material, but they do allow short-term rentals on specified levels, starting units at 300,000. And go up from there. And so again, everybody I think is working within Tampa to try and provide more entry level housing, and also to fluctuate and adjust with the current market that we're dealing with.
Yeah, and I love the fact that they're even catering to investors with that.
Yeah,
you know what I mean?
absolutely.
That's huge.
It's
That's
amazing.
And
Yeah.
from the builder, that's a really smart separation to have.
Yeah.
Where you can kind of separate the permanent residents from any
Correct.
transient renters that may be coming
Correct.
in and out of those units on a day-to-day or a weekly basis or whatever. It really makes it a little bit quieter and more stable for those people who own the units and who live there.
Well, and everybody knows about Water Street, but this development's going to be walking distance to Water Street. So we're going to see all of downtown Tampa change.
Yeah, so correct me.
Yeah.
This is right off the Ybor channel, correct?
More or less.
Okay, awesome. Awesome. Vinny, do you want to touch on anything here?
I think we did pretty good for this show, you guys. We've talked about a lot of the things going on in Tampa. We've
Right.
touched on the mortgage rate drop and or the rate drop in general, and how that's going to affect the mortgage industry. We all know that Tampa's a thriving community with a lot of vibrant, wonderful people that live in it.
Absolutely.
That we love this city so much, and we just want to see this place grow. And the
100%.
Tampa Live podcast, we are committed to bringing you all of what Tampa Bay has to offer, not just talk about real estate the whole time or mortgage the whole time.
Right.
We will be bringing more and more business owners on in the future, and kind of give you a big macro view of the Bay Area here. Thank you, Jeff.
Awesome. Glad to have you on the show today, Vinny. Tyler, I appreciate you hosting us
Appreciate
down
you
here at
guys.
Blue Gray Mortgage. And John, I appreciate you taking the drive out here to be with us today.
Always good to be invited.
Yeah, this is episode 2 of the Tampa Live podcast, and we will see you next time. Have a great day.